how do stablecoins have the best business model? So let's start with the smaller one, and then we'll go with Tether. So if you go to Circle's website, you can see what their backing is, right? So if we go here and we hit January 2024 and we go through this, you can see that a lot of their backing is US Treasuries, Treasury securities, right? And remember, Ethereum's daily fee was 19 million. They have more in their Circle Reserve Fund than all of the Ethereum fees. And when you're holding these treasuries, you're getting a yield on them. Like, you're not just holding them. All right, guys, so here we are on BlackRock.com, and this is showing the Circle Reserve Fund. It shows the portfolio characteristics, the holdings. So you can look at this, and you can see 1-day yield, 5%, 7-day yield, 5%, 7-day yield, 5%. And then, guys, what you have to keep in mind is that when you go on Coinbase and you exchange your US dollars that you can get a yield by holding it in your savings account at your bank, albeit a shitty yield, when you take that and you go and buy USDC or mint USDC, whatever you want to call it, essentially what's happening is Circle is taking your US dollars and they're using it to buy these things that we're showing here, and they're getting a yield. And last time I checked, when I'm just holding USDC in my wallet, I'm not getting no kind of yield. So they're literally taking your money, getting a yield on it, not passing any of it on to you, and they're making a killing.
It used to be 8.6% on BlockFi. But no, another important aspect too to point out here is the average maturity. So now, if this maturity, the average maturity was, let's say, even 60 days, I would be worried. The reason why is if you look at what happened with SVB, Silicon Valley Bank, what they did is they borrowed long and they lent short. And they're doing the opposite. Well, I guess not the opposite, but they're borrowing short, and they're also, I don't know if they're lending at all. I'm sure they're lending at some point, and I'm sure they're lending short. And the reason why it's important to have a short maturity or lifespan of these assets that you're holding is in the event that you need to rebalance, or in the event that you need to buy more assets. Obviously, that decreases the risk that you would have a run on the bank or a run on the stablecoin reserves, whatever you want to call it. So the average maturity is always important to look at if you're looking at any stablecoin holdings. And another thing to point out, which we'll probably see on this as well, is that most of these are cash equivalent. We've been talking about cash equivalent, and that means, they're investing into short-term treasuries. I think you actually just said this. They're investing into short-term treasuries. They're heavily investing in the repo market. So the repo market, just so you guys don't know, so you got the reverse repo market, and then you got the repo market. So basically, it's just short-term borrowing and lending between institutions, banks, Federal Reserve. It's very short-term, literally overnight to maybe a couple days, right? And so they're generating 5% overnight on a lot of their funds. And then they have bills. Bills, just so you guys know, they don't go above 1 year. So whenever you hear a treasury bill, that's all of treasuries basically below 1 year. And so those are the longest dated assets that they have. I mean, they probably have shorter dated treasuries as well. And so USDC, they're in a good position. Even if they were lending right now, I would not be worried about like an SVB situation to where, they could become as a token or as a protocol, they could become insolvent because of their backings. They're doing a good job pretty much. Let me just put it that way.
Yeah, and guys, this is another thing to keep in mind. Remember a few months ago, I had just came off a cruise. This was about a year ago when USDC broke the peg.
Yeah.
It wasn't because they were mismanaging funds. I remember Jeff Bezos was talking about in the .com boom how the price of the Amazon stock was dropping crazy like a rock, but all the internal business KPIs were doing good.
Yeah.
This is a way you're able to verify it. Like, obviously, these audits come out on a monthly basis, so you can't keep a real-time estimate. But you can go on here and know that, they're getting a yield on all this stuff. They're not mismanaging their funds. But people get scared, and they'll sell their USDC. And like we were talking about before with supply and demand, since it is an asset-backed stablecoin, it'll affect the price for a minute. And that's why when USDC dropped, I actually bought more USDC. How often is it that you can
buy a stablecoin
capital gains from a stablecoin? That's
right.
Crazy.
And no, I just want to point out one last thing. So the last thing is that look at these maturity dates. This actually matures tomorrow, but you can see they're just going to reinvest. So yes, they introduce reinvestment risk when it comes to investing in treasuries, but once again, because it's short dated, that basically it just makes it a lot smoother process. So I really appreciate the way that they handle their backings, and they don't use a lot of commercial paper. Not a lot. They use some, but not a lot, which is great.
So guys,